What's Forex?
Take it, yeah.
Okay, I just have some idea.
No issues.
I know it's
Read
a
up.
trading kind of thing, trading stuff, all about cryptocurrencies.
Okay. Okay. So what's Forex? Man, I like you to talk. What's Forex?
Um, Forex.
Yeah.
I don't know, Shabo. I think it's something that is with trading on like different currencies.
Okay, that's what I want to hear. Forex is actually a short form of foreign exchange. It's the full pronunciation is actually foreign exchange, but it's been shortened to Forex. The FOR and then the EX as Forex. Do you understand? Now, Forex in itself, one way or the other, one of us might have traded Forex without our consent. Do you understand? I was wanting to hear exchange of currencies. That's what Forex actually. That's the whole of Forex. Trade of exchange of of currencies entirely. Do you understand?
Yes, sir.
Exchange of currencies. Now, maybe you've traded Forex without your consent. Believe me, if you have traveled from Nigeria to any country before, you have traded Forex. If you have exchanged your dollars to Naira before, maybe from one Abuki, you have traded Forex. You just changed a currency. Do you understand? That's what it entitles Forex trade. Do you get? Now, since we've gotten the meaning of Forex, I'd like to go straight to the next one. I actually came with, I want to go with it so that we understand it. Now, can it be used as a career path? That's the second question. Can someone actually say Forex, this is what I do for a living? Yes, someone can do that. Yes, it can be a career path. There's a university in London. Yeah, I can't just remember the exact university. It's actually a course there where you go to study and come out with a certificate. Do you understand? So it can be used as a career path. You can actually be a forex trader. That's what you do for your living. Do you understand? Now, next I'll be going to currency pair in forex. What's currency pair? In fact, before I go there, sir, I would like to align to also make us understand that forex entirely, the entire of forex, it's based on currencies. The entire of forex is based on currencies. Now there's crypto. Crypto is different from forex trade. Do you understand? Crypto is on its own. We have stock. Stock is on its own, but you can trade it. Do you get it? You can trade it. Just like you have your gold, your AUD, USD, and all that, AUX, USD. All those ones we're going to go into it. Now, what's currency pair? Currency pair is actually two currencies of different country paired together. For instance, you have your Euro USD, which is Euro and
Dollar.
US dollars. Do you understand? Euro USD, Euro and dollars. That's a currency pair. $2 being what's it called? Paired together. We have your AUD USD, which is Australian dollars and United States dollars. Are you getting me? They are much like that. We have the ZUX, that's the South African, what do they use again? ZUR, South African rounds, and then USD. You can actually trade. Nigerian naira is not a international. You cannot trade Nigerian naira internationally. It's not recognized internationally. Do you understand? So there are many currency pairs. We have the GPB, which is the Great Britain USD. We have the Euro USD, the USD JPY, the United States dollars, Japan yen. They are much. Alright, now in the pair or the currency pair. There's what they call the base currencies and the quote currencies. The base currency is actually the first currency you see in a currency pair. Do you understand? The base currency is the first currency you see in a currency pair. If you are pairing, for instance, you are pairing Euro USD, the first currency in that currency pair is Euro. So that's the base currency. So you are trading from Euro USD to United States dollars. I don't know if you understand what I'm saying. Do you get? So the base currency is the first currency you see in a currency pair. Now the second currency you see in the pair is called the quote currency. The quote, QUOTES, the quote currency. The quote currency, and that currency is actually a currency you trade to. Let me define it like that. A currency you trade to. So if you are, for instance, you are trading Nigerian naira to Ghana and South African rands, and you now see something like NGN, ZUR, South African rands. It means you are trading from the base, which is Nigeria, to. Are you getting me? Alright, so that's that for that. We're going to the next. Now, I need to say this before we continue. Those currency pair is being regulated by ISO, International Standardization Organization. Now you cannot see, for instance, you cannot see USD Euro. You cannot see what's it called? USD AUD, that's Australian dollars. Now you have to go with conversant with these shorts and this thing so that you know if they are actually talking about a particular currency. Now what am I trying to say? Let me come back. You cannot see USD Euro. It's not possible because that particular AISO has actually regulated it. Do you understand what I'm saying?
Yes, sir.
Are you getting me?
Yes, sir.
So we go next to what is pips? I think Go ahead, I will have to jump these pips now because I need a system to explain that. I need. Okay.
Under my system. Then connect.
I need data.
Sure, I have data. Don't worry. Data choke. We're on my Wi-Fi. My hotspot, sorry. But
They are major currencies. Okay, the currencies are actually divided into two. You have the minor currencies and then the major currencies. Do you understand? The minor currencies and the major currencies. Now, the major currencies are the currencies that are mostly traded. For instance, now, the Euro USD is mostly traded. So you are likely, it's not volatile. You are likely to, it cannot be tampered with. If you get to trade the Euro USD, that's what I actually trade. If you get to trade the Euro USD, it's not volatile because people are actually trading it day after time on and on. Do you understand? So I'll list out the major currencies for us and then we'll go into the minor currencies. Okay, the major currencies are GBP USD, Great Britain Pounds USD, Great Britain Pounds US dollars, major currencies. And then Euro USD, major currency also, and then USD JPY, USD Japan Yen. That's and then we have the AUD USD. Am I fast? Sorry. The first one is GBP USD, and then Euro USD, USD JPY, and then AUD slash.
you did use slash.
Okay.
No, don't slash it.
Together.
Just put it together. It's a pen.
AUD what, please?
AUD USD. The AUD USD is the Australian dollars USD. The NZD USD. New Zealand dollars USD. And then the USD CHF. Then we have the last one, the USD CAD, which is USD Canadian dollars. Those are the major currencies. They are not volatile. When I mean volatile, it means that they cannot tamper with it. But because people get to tamper with trade. Yes. Hackers get to tamper with your trade. You get to place a trade, for instance, and then they get to hack the trade and let it go to the wrong direction.
Okay.
So these particular currencies, these particular currency pairs are not volatile. They cannot be tampered with. Do you understand it? Alright, so we are going to the next one. Okay, the Forex market is open for 5 days, 24 hours, for 5 days in a week. We don't trade weekends. Trade from Monday to Friday. Friday by 5 p.m. close trade. No, the trade close. Friday 5 p.m. I'm just giving you the basics. So don't go into the other ones. Do you understand? So next we have okay. As long as these countries are in existence, okay. Firstly, I was talking about if Forex can be used as a career. Yes, it can. The reason is that as long as we have different currencies in the whole world, as long, the only time we buy Forex will not be used as a career or will not be in existence is when the whole world decides to have one currency, which is not possible. Because if the whole world decides to use dollars, there are countries that I know that will not be in alignment with it. Countries like Russia, China. Do you understand? So they will not be in alignment with it. They will want their own currency to be used as international. But as long as it stands that the whole world has different currencies, Forex will keep on existing. Do you understand? So the countries that actually determine whether Forex exists, they are actually the global markets whereby we get to trade. We have countries like Great Britain, the US, United States of America, Turkey, Sydney, and Australia. Now, I told you about the fact that we trade for 5 days in a week and it ends by Friday 5 p.m. The reason is that these particular banks, these particular country banks, they get to close for that particular time. So they are not working by then. So that's why they get to close. I don't know if you understand me.
Yeah.
Do you understand? So okay, let's go to what's a broker? A broker in Forex. A broker in Forex. You have heard of a broker before?
I think somebody that is like a subset of the main market, basically.
A middleman.
Yeah, something like that.
Yes, I think that's that. A broker is a middleman. A broker is a middle person that actually takes you to where you want to trade. Do you understand? Now, for instance, the broker I use is cLOUDig. I also use Xness. So there are other brokers. There are a lot of brokers, but the only ones I know that I use is Xness and cLOUDig. So cLOUDig is the broker I use. Now, a broker is okay. There's what they call leverage. Leverage that a broker gets to give to you. The leverage is an amount of money that is being given to you by your broker to trade with. Leverage is an amount of money that is being given to you by a broker to trade with. So, for instance, you get to register with cLOUDig, they will not give you a leverage of $100. That $100 they are giving you to trade with. Whether you lose or you gain profit from it, whether you lose or you gain profit from it, they are going to collect their money back once the term has expired. Do Do you understand? Are you getting me? Whether you use the other dollars that are given to you, that leverage money, the other dollars that are given to you to trade with, whether you come out with profits or you come out with a loss, they are going to collect their money back. So you get, so that leverage is actually the amount of money that is being given to you to trade with by your broker. Do you understand? So that's that for that. And then, okay, what determines if I will actually become, if there's going to be a lot of profits in my trading, my trade, for instance, what determines it? What determines it is this what we call lot size. Lot size. Lot size. Lot size is, for instance, as a lot, L-O-T. For instance, the country we are now, I think the richest man in Nigeria is Dangote, right? Or it has changed, I don't know. The richest man in Nigeria is Dangote, right?
Yes.
Okay. Dangote, if I, for instance, I bought this system, this is an HP system, quite 3, right? Quite 7, okay. I bought this system at the rate of 1,000 naira, for instance. And I bought 10 of it. Because Dangote has the money to buy much, he now decides to buy 1 million of this particular system. Are you getting me? Now, if this system in the market now gets to increase from 1,000 naira to 2,000 naira, me, I sold my 10 pieces of the system that I bought. I gained 20,000 naira from it. Do you understand? Now, Dangote now decides to sell this 1 million pieces of the system. Who gains more? Dangote. Why? Because
You purchase more.
he purchased more. Do you understand? So that's it. If you get to purchase more, you get to invest more. Do you understand? You get to put your money more. You get to see much profits. So if I'm actually putting $10 in a trade, for instance, and then you're putting $100. And then there's what they call volume. We'll go into all those ones later. The volume is actually the determinant of your trade. When I mean determinant, I'm talking about if, for instance, there is 0.01, there is 0.01, there is 0.1, there is 1.0, there is 1.10. Now, 0.01, if you make a trade of $10, for instance, you now put the volume to be 0.1 or 0.01. Each pips, that's what I want to before I get here, I wanted to talk about pips. Pips is actually the first number after the decimal. After the decimal. For instance, if you get to see the fourth number after the decimal, I'm going to explain it. So you may not understand this now. You will not understand the decimal I'm talking about. I'm going to explain it. Do you understand practically? So you might get to make a trade, for instance, you make a trade of $10. And you now put the volume to be 0.01. Each of the pips that gets to increase in that particular trade you made, you're getting 1 cent as your profit. So if you put 0.1, each of the pips that gets, somebody, all of you, if you have a phone, download OptaFX, download OptaFX. So if you get to put 0.1, each pips that you see in that particular trade, each profit you get, 0.1. If there's a pips that gets to increase in that particular trade, you get $1. If it's 1.0, you have to get $10. If it's 0.10, you have to get $100, as the case may be. Do you understand? Just in case, just as you are getting your $10 in each pip according to your volume, if it also drops, you get to lose $100 also according to. Are you understanding what I'm saying? Your Forex account. So these are. We're going to put slot in our email. Can see it?
Yeah, I can.
So I think there's an email. Can I borrow this email? Michael.
Yeah, that's my email.
Okay, this is for signing.
That account has, I think, Size of Forex. Octa, right?
Yes. You see this number I see here? This one here? This is like your account number. Don't show anybody this number when you have a real account. You see, this is a you see a demo. You still see the same number here. This number don't show anybody. This number.
Okay.
For no reason at all. Okay. This is the number. And this is the trading charts. It's open.
I should refresh the page.
That's strategy. That's how you get to place your trade. You understand? There are two types. They actually arguable. They are saying that it's 3, but it's not 3. It's 2 because the other one is based on the other 2. Let me explain. It's what we call the fundamental analysis. Now, the fundamental analysis is what talked about the world entirely. I mean the news, the global news and updating, news impact. Okay, as at when Israel was, I don't know if they're still fighting. Gaza, when Israel was having issues with Gaza, you see that their currency went down at the market. I mean Gaza's currency. So if for instance you now go and start trading with Gaza's currency, I'm just giving an instance. The other time whereby Russia was fighting Ukraine, see those times there was clash of currencies went down. You understand? So you have to check what is actually happening around that particular country you want to trade on their currencies. Do you understand? You have to check. So you have to go with your news, you need to be versatile. As a trader, you need to be versatile, always in your news. So you have to check what's actually happening in the US. As at when China was having with US, what's it called? China was having something with US. A lot of examples are there. So you have to check what is actually happening. That's what we call your fundamental analysis. What is happening? What is happening to this country? What is going on around that particular country? Before you know, something is happening. Something is happening. It's like there's no data.
Yes. Thank you.
Currency you want to trade on. So you need to be versatile with your news, check what is happening. If you want to buy when you are supposed to sell, you paralyze your market. Do you understand now? This is what we call technical analysis. That's the second one. The technical analysis. The technical analysis is, you see this chart now. You see this chart?
Yes, sir.
See this chart? It's how you get to predict the markets repeated history. What happened before will still happen again. Do you understand? So we this is $10.
So a trader can actually set his goal.
Very well. Very well. You can set what like Bet Naija, but it's not Bet Naija. 2 odd. The 2 odd, you have $100, 100 naira. You want to play 2 odd.
You want to multiply.
By that particular amount.
Take 200.
Do you understand? So, by adventure, you want to make $100. Place it like this.
So what are the parameters? One you check. Can you check? Is there any parameter you check before you can place a higher or lower?
Okay, it's the comprises of your, after you have finished checking your fundamental analysis and checking your technical analysis, you check what you are trading now. Now, if you trade USD today, there's a possibility for making profit. It depends on what you are placing. It's either you are buying or you are selling. Now, as it stands now, in the whole of the crypto markets, things are going down. We placed a trade last 2 weeks. I and my friend, we lost about 200k in that trade. Now, we did the mistake. The mistake was that there's this guy they arrested. What's his name? The owner of Tom. They arrested him in France. Now, when they arrested him, we thought that based on his connection, that we'll be able to see how this guy will release on the following day. They arrested him on Friday, last 2 weeks Friday. Okay, we thought that okay, let's see, maybe they will release reason, because when we bought that particular, when we traded that particular market, we bought because the thing was going down. So we felt that okay, the following day,
You need to come back up.
man, the guy is still in custody as I speak. Still in custody, so we lost that money. Do you understand? So after you have finished checking your fundamental analysis, you go and check your repeated history, your technical analysis. That's what you do. Do you understand? Okay, I will have to list out the disadvantages and the advantages of both the technical analysis and the fundamental analysis. Now, one of the disadvantages or one of the advantages of fundamental analysis is that there is an impactful movement. Like if you get to check your trade, get to check what is happening around, it gets to impact your trade. There is this impact it has to do gives your trade. Do you understand what I'm saying? Okay, so we have the second one is applicability amongst various markets. Do you understand? I think before I get this, let me even come to this site. Do you understand?
Yes.
Let's go for a demo account. Let's do a demo account. Customize feed. I think I need to show you what's happening. Okay, this customized feed now is the ones you want to be trading. So you click on the ones you want. This is Great Britain, this is USD Japan yen, this is USD China, this thing, then AUD, Australian dollars to USD. Just click on the ones you want. And then when you click on the ones you want to be trading, you want to be seeing the news, and then you click on next. Now they'll be showing the chart and the news of what is going on in that particular currency pair. This is it. I told you about volatility, the support and resistance. These ones are going to be very much later. I want to open a demo account so that we can supposed to click on it.
So sorry, this chart now. What is it against? Is it euro against US dollars, or because there's no way that maybe you have something like a chart or graph and you don't know what's yes.
You see this red candlestick? It's called a candlestick. So how do you zoom this extension? So we have to go back now. This is balance. That's the demo account. What you have now is $500. This is 5,000.
5,000.
No, this is 500. This 5,000.
That's 5,000.
$5,000.
This is demo account.
Yeah, this is demo account. So
Don't play this taking serious.
no, this is when you learn how to trade with time. And this is perfect. Okay. If you check your balance now, then you're seeing 5,000 in. I see it, right? So you asked a question, come again with it.
I said this chart for us to be able to read. You know, normally when you want to read a graph or a chart, you're supposed to know what it is against, like what the things under, those values under, what it is against. I don't know if you understand what I'm saying. Okay. So that I'm asking if the ones under, if they are, if like the chart now, if it's euro against dollar.
Okay, this is it. First one. I talked about the fact that if you are trading the currency pair, which is euro USD. Do you understand? Like, you are trading on this now. You are trading euro to US dollars. Now, the chart is not like your mathematics chart that it goes against. Now, you see this red candlestick you are seeing here? Yeah? And this green candlestick is called the bullish. It's called the bearish. Now, you either sell if you are selling and then the red candlestick gets to go down, you're making profit. So you can either make profit from both the selling and the buying. Are you getting it? Do you understand? You can make profit from both the selling and the buying. The green candlestick is buy. The red candlestick is sell. So if you place it, okay, let's place a trade. Let me give you an instance. Now, I've seen this trade now, repeated this trade. I told you about repeated this trade now. What happened before will likely happen again. You see this green? Okay, that's gone down to this trade now. See this place now? Have you seen it? Have you seen this place?
You are smart the mouse.
Okay, yeah, sorry. Just watch what happened to the trade. Wait. I buy now. So the volume we actually put there was 0.01. Just watch what will happen. Remember, I buy green candlestick is going up. I bought. So if I get an increment of that green candlestick, I'm making money. Just watch my account. If you check my account now, it was $5,000. It's now $499. So let's see what will happen.
It's going down.
It's going down. Let's just see what will
Okay,
happen.
you bought.
Yes, I bought.
It's expected to be going down.
Yes. So if I buy now, if I buy and then it sell, I lost. If I green and then it's red, I lost. I think you understand now. Just watch.
Now it's beginning to grow.
Just watch what will happen now.
Okay, the green is growing. But it's not stable.
It's not stable.
What are that? It has to markets that are working to control. I think so.
So what is actually causing this fluctuation is it's not volatile. People are trading it. People are buying and selling. People are selling. Just what we watch. Just watching. If I leave this trade for 2 hours, I'm going to make money from it. You know why? Let's go. Let's see.
So which of the green are we looking at?
This one.
Okay, that's one.
All the greens. Anything that happened.
Okay, all the greens in the chart.
No, not the one that has passed.
Okay.
You understand?
The one
This one that
that
has
has
passed. Anyone that is happening around the side, this one is what we're looking at.
But there are two greens there. Okay, one red has come now.
Yes. If you see any red, it means I'm losing.
Okay.
Now that I bought, if you see any red, it means I'm losing.
But it's not directly reflecting on the balance you have there now.
It's
You lost on the gain.
you see it. If I close orders now, you see the total amount of what I got in that trade. That shape. Sorry. See it here. Profit and loss. Profit and loss. Are you getting price change? Close time. Volume and loss. Direction. Let me explain what's happening now. This particular thing. Now this symbol is the currency pair you are trading on. Now direction is buy, which is green candlestick. You understand? I bought. Now the volume loss. I told you about volume and lot size the other time. That's amount of what you want to get, amount of what you want to get as your profit or loss. That's what you're going to do. So the volume size is 0.01, which is equivalent to 1 cent. The close time, that's the time I bought. This is it. And then the profits change. That is to say 1.1093. 1.9093 to 1092. I told you about pips, that pips are the fourth number after the decimal. It means that if you check this particular, what's the pip here?
4. Sorry, 3.
What's the pip here?
2.
What happened?
That's reduced.
What's happening now? I'm losing.
Because
Do you understand? But it's growing now. You see, it's growing. I mean, I can actually increase this account to $10. But wait, let's not go into those ones now. Then this is what has happened, the price change. If I close the chart now, you see what I actually gained from the chart. This thing. Now you see profit and loss is what is calculated here. Yeah? So let me close all that. Ready? Okay, it's like I mistakenly clicked on them.
no, that trade was a close trade. I think the one I'm looking
Yeah, that's what I'm saying. I've closed it.
Okay.
I've closed it already by mistake. I clicked on this close before. Yes. So I was supposed to come to pending. Do you understand? And after I check pending, I'll now go on the trade and check what's happening. But let's place a trade again so that we understand what I'm actually talking about. So okay. Are you understanding me?
Yes.
Repeated pattern, what has happened before is likely to happen again. So we'll not check. I'm not supposed to open this chat. I don't know why I'm here. I'm just supposed to give you visits because you cannot exhaust it at all. Opening the chat. If I had left this particular trade I just made just now, I'd have made a whole lot of money from it. See this green here? If I had left it, I would have made a whole lot of money because the thing will keep on growing. Do you understand? So I lost $0.08. Okay, let's go to market order. Let me see again. I'll explain what I'm saying. Let me increase the volume. 1.10. What's happening? Okay. Let's look like this. Okay. I've even placed about 2 plates. No. Okay, this particular trade, can you see? Sorry, I'm kind of not stable. This particular trade, this is sell, the direction is sell, which is red. So I'm expecting red to go down, yeah? And then volume 1.10, that's to say if each of the pips I should make up to $100. You getting me? And then we have the price change. The price change is 1.31605. to 1.31635. And then take profit on stop loss. Okay, I think I need to explain stop loss and take profit. Now, let's go to this XL with stop loss. Floating profits. I don't want to go to all these ones. I don't have much of time. Did that buy? We did that buy. So, where's we can go with that trader from trading. That's for trading. This would have been better if it's still open. It's not open. Okay, so this is called the trading interface. Everything you are seeing here is called the trading interface. Anything you have to see in the trade entirely. I spoke about, let me just give you a rephrase. If you have questions, you can ask. This is not like an explain chat today. It's one-on-one things, so we have to take time. You understand? So there's not like an explain chat. Like I'm not actually, I'm just wasting my time here. So let's talk on pips. I talked about pips, talked about major currency volatility, market hours, the advantages of fundamental analysis. I mentioned to the other time. Yeah, so the third one now is understand market drivers. So it's not like I'm explaining this chart for you to understand today. I'm just giving you a hand. So understand market drivers. Who drives the markets is very, very important. You get who drives the market, which country, which currency is actually driving the market now. So for instance, if Dangote is buying 200 pieces of this phone, 200 pieces of this phone, is buying this phone, or let's say Dangote is buying anything that looks like this phone. He's buying Samsung phone entirely in the world. Now, if you now go and buy the same phone, which we all know what is happening in the Nigerian world today. Once there's what's it called? There's a demand for a certain product, the cost or the amount will be high. So if Dangote is buying this, everybody will want to sell to him. Do you understand? Everybody wants to sell to him. Now, anybody that is buying this particular, in fact, people will not want to even buy because the people that are selling will keep this particular phone for a very high amount of money. Do you understand? So, Forex is more of tactics, more of studies. Do you understand? It's a course on its own, a 4 years course on its own. So, you need to study a lot, you need to check your browser a lot. Yes. So you must know who determines the market drivers and then valuation metrics. That's the fourth advantages of fundamental analysis. Valuation metrics. Do you get? And then the disadvantage of fundamental analysis. One of the disadvantages that is actually affecting me even now is over information. Fundamental analysis. Over information. If you go to trading view, you're gonna see a different information there. You go to this place, you're gonna see a different information. You go to your Sahara News, you see a different information that I think people are just posting. If you now want to start following bloggers, you now start getting more confused. Do you understand? So over information is actually one of the problems. Like I said the other day, me and my friend had lost a certain amount of money. It was actually over information because before we actually entered that trade, we saw that because of the influence that guy has is not going to take time in that jail. So when they arrested him, we bought, the thing was going down, we bought, all of a sudden the thing went down. Do you understand? So over information. Number two, market expectation versus reality. It's just like what I ordered versus what I got. So if for instance you know, because of the fundamental analysis, you know, okay, try to analyze and say, okay, let's see, Euro will sell, you know when to buy. I'm just talking because if you do not hold the two analysis, they work pari passu. If you do not hold the two analysis together, the two strategies together, you will fail. Both your fundamental and your technical analysis must be held together. So if you're not banking on your fundamental analysis, you now start seeing that what you actually ordered is different from what you got. So in that you now come because of how you have fundamentally analyzed something is dropping down. You now went to buy. Do you understand? You went to buy. When you went to buy, forgetting to check your technical analysis. Repeated history. Repeated history, what happened before can ask these people about 90% possibility of happening again. You didn't check that, you now went to straight to buy. Once you buy, you now start seeing that this is not what you're actually bargaining for. So as you work with this, also remember that you should work with this, fundamental and technical. Do you understand? And then dependency on accurate data. It will depend on what is happening with your system, without even checking what is happening on your technical analysis. I'm just trying to make you understand that you must take a balance. Once you have finished checking your fundamental, that's the first thing I check. Check your fundamental analysis, and then you go straight to your technical analysis. And your technical analysis is dependent on trend lines, margin value, proportion ratio. They are different. I cannot start explaining those ones. Yeah, understand? Trend line, start checking your trend line, M5, all these things here, they are determinants. Let's come to, see the indicators. Exponential moving average, simple moving average, relative strength index, stochastics, Bollinger Bands, volume, momentum, average. These are indicators that can help you with your technical analysis. So if you are not actually checking them, you may not be a good trader. So you must just keep a balance. Do you understand? Okay, so advantages of technical analysis: clear entry and exit points. Clear. Once you just check that, okay, fine, this particular trade, this thing has happened before. After you have used your trend line, there's what they call trend line. This is trend line. I click here, for instance. I want to measure from here to here. I'm giving instance. All these things are indicators. This trend line I just made now. It's a calculation of what, like I said, what has happened. Don't forget that statement. What has happened before will happen again. With this your trend line, you can be able to determine that this market is going to come bullish. Going to go buy or going to go sell. Do you understand? It's calculation on everything that you need to know. I cannot exhaust this thing because it's so complex. So complex. So you know the clear entry, where to enter a trade and when to exit the trade. And then availability of tools, advantage. That's what I mean availability of tools. I mean all these tools here. This your exponential indicators. You come here and then you click. See this thing that you are seeing now. See this blue, this one here. These are exponential indicators. You understand? These tools, this one here, all thing here are your tools in trading. So you must know how to use them per time to actually work. You understand? So okay, this particular technical analysis can be automated. It can be automated. When I mean automated, it's what we call bot trading. There's what we call bot trading. Bot trading is robotics. Like you get to look for a programmer, for instance. The programmer is going to program a technical analytic strategy for you. Do you understand? A technical analytic strategy for you. That technical analytic strategy will help you. That technical analytic strategy, the bot will be the one trading for you. You just have to just come to a particular platform and then you click on it, and then it will go directly to the trading platform, and then there's a bot, a robot trading for you. It's called bot trading. Do you understand? People buy robots, 900 million, 100 million, and then the bot is trading for them. They're just staying and they're getting their profits. But I don't really believe in bot trading, because the bot trading, the robots, they don't care about your fundamental analysis. All they just know about is your technical analysis. So if you get to employ a bot to trade for you, it doesn't understand, doesn't get to go and check what is happening in the marketplace. For instance, if Russia and Ukraine are fighting, it doesn't care. All it needs to do is to just go to its technical analysis, and sometimes what has happened before may not happen again because of fundamental issues. You get me? So what has happened before may not happen again because of fundamental issues. So if, for instance, dollar is selling, there was not a fight in America, or somebody now sends missile to America to crash, the bots will not recognize it. Do you understand? So it allows, number 4, I'm rounding off, allows quick analysis. That's technical analysis. It allows quick analysis. You can just come in. After you get your indicators, I cannot explain about these indicators or this one here. I'm just giving you a preface of it. Do you understand? So if you're actually interested, you can come around and then give you the analysis in time. Just as much as you can make money in Forex, you can also lose money. Yes. When I started Forex, this is my older brother. When I started Forex, he has the story. Borrow money until some time. Do you understand? So if you're not careful, and Forex is addictive, making money is actually addictive. You understand? So if you're not seeing that the thing is selling, you're buying, you have to place all your money, crash. You don't declare yourself. So it allows you the 5th one, support proper risk management, technical analysis, proper risk management. Do you understand? So you get to check. I talked about stop loss. Stop loss is, for instance, you place a trade, and then you now say, okay, fine. Before this trade, let me do this thing. This one is very, very important. Should I leave it? I don't have time. Okay, stop loss. They are not coming as this sets. Can you set this one in? Sets. Price. Let me just explain this, because we need time to start getting these things. See, the chart is starting changing now. You see, okay, the stop loss is actually risk manager. So if, for instance, you sell, you buy, and then the thing is going up, you buy, you are seeing a green candlestick. If you set a stop loss on your trade, if that particular trade reach this, okay, you set a stop loss on this amount. Are you seeing this amount? 1.318000. You set a stop loss here. It means that when you place this trade, no matter how it gets to, once it comes to this particular place, you should stop.
Even when you're gaining.
Even when you're gaining, you stop. So that you will not lose, because sometimes you get to do that. So that's stop loss. So when it gets to this particular place, stop loss can also be be in sell also. If you sell and the thing is going down red to a particular place, and then you put the stop loss to be in this place, for instance. Yeah? Once the trade has gotten to that particular place, it will stop. Take profit also. Stop loss is for the bearish, that's the red. Take profit is for the green, bullish. So take profit, TP and SL. Take profit is when you are selling, when you are buying, the thing is going up. When it gets to that particular place, you want it to stop, it takes the profit. And then your trade is closed, even without your consent. Do you understand? So it's quite, it's there's this particular technical analysis. I'm not aware. It supports proper risk management. Then the disadvantages of it is subjectivity to interpretation. So if you now start, are you subjectivity to interpretation? I don't want to. Let me just say it. Because if we start talking about this one time again, and then lagging indicators. When I mean lagging indicators, some of these indicators sometimes they used to lag. They will tell you that you are supposed to sell. You are supposed to sell. Meanwhile, once you sell, you lost. I don't know if I cannot go deep into all these things now. Do you understand? So we have number 3, we have noise in short terms. Number 4, we have false signals. Technical analysis can actually teach you to be false signals. That's if you're really banking on it. So that's why you need to go to even your fundamental analysis. Go and check what is happening. As I speak to you today, by next week, dollar will be 1,200, 1,000 naira. Why? 40% of Nigerian economy is being run by petroleum and crude. Nigeria is buying crude, petroleum now in naira from Dangote. I mean, are you getting me?
Yes.
They are buying it in naira. That is to say, the support system of dollars. What's actually make dollars? What's the word? What's making dollars valued in Nigeria? That's, I mean, 40%, that's almost a 50% of Nigeria economy is being run by crude oil. So now, the most valuable thing now that is making dollars to be more valued is being taken off. So as I speak to you now, next week or next 2 weeks, you see dollars, it will reach up to 1,000 naira or 800 naira. But it will be the effect will be much on the citizens. Because that will take a lot of things I won't get, but these are fundamental analysis that we need to do as traders. So reliance on historical details. That's if you over-rely on historical details in your technical analysis, it may get you wrong and all that. So that's that for that. I think I've exhausted my time. Do you understand? So if you actually want to get much in-depth insight, I was not able to explain it in the chat. I was not able. If you want to get in-depth insight, come around and then we'll get to. Do you understand? So that's that.